Hey guys, thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, I'm going to be talking about our investment initiative and what I would like for you to do as well. So, I'm going to be investing $5 a day starting in January. I finally have the brokerage picked out. It is going to be Robinhood. It was previously Webull, but Robinhood is going to be a much smoother and more intuitive experience overall for everybody. So I'm going to be doing $5 a day, but I would encourage you to do maybe $2, $1, or 50 cents a day. I'll show you what that looks like on a weekly and yearly basis so you can kind of feel if you're comfortable with doing that. Also, I don't recommend I don't recommend you to look for your own stocks if you're not comfortable with that yet. I will show you how you can find or how to invest in the SPY or the Dow Jones Industrial Average. Those have gone up consistently ever since they were started. So the S&P 500 is the top 500 stocks. The Dow Jones is the 30 most prominent names. Those are going to be the most typical household names: Apple, Home Depot, Microsoft, more blue chip type stuff. So what that's going to look like, I'm going to show you on Robinhood how to exactly do it as well, so there's no confusion. Um, and yeah, and what the goal is. So let's go ahead and jump right in. All right. So here is a breakdown of what you can anticipate the cost to look like on a weekly or yearly basis if you are investing $5 a day, if you're investing $2 a day, $1 a day, or 50 cents a day. So if you're going to invest $5 a day, you'll spend $25 a week. Again, that's $5 for Monday, Tuesday, Wednesday, Thursday, Friday. 25 bucks times 52 weeks in a year, that's going to be $1,300. There are going to be days where the stock is not open due to federal holidays, so it's not going to be it's not going to follow the exact trading days, but to make it easy, we're just going to make it a weekly investment based off of the week and not trading days. So if you're going to do $2 a day, your weekly investment is going to be 10 bucks, and over the year that's $520. And at the very bottom of the spectrum, if you're going to do 50 cents a day, it's going to be $2.50 a week, and it'll be $130 a year. Now, I really would like you to participate in this just because I want you to get comfortable. Number one, parting with your money into the stock market. A lot of people think the stock market is a black hole and a scam, rigged, whatever, etc. But it is a place for you to grow your money if you're investing it in appropriate companies and places. So number one, avoid stocks that are being talked about on TV or in any media or on any forums. If you are going to be doing your own stocks, but I would suggest if you just want to set it and forget it, not even think about it. We're going to talk about the next slide here. All right, so here are the main investment areas we're going to focus on. Again, I'm not a big fan of having dividend stocks as investments. I do have a dividend portfolio, but it's not something I think that should be explored at these stages. So we have a few different options. Number one, if you just want to participate, you want to set it and forget it, not even think about it, I would say you should consider thinking about the S&P 500. That is the top 500 stocks in the stock market. That is going to be a little bit more volatile. Or the Dow Jones Industrial Average. That is going to be 30 more prominent stocks like your everyday Microsoft blue chips, more household names. That's going to be a little bit less volatile, but over time, both the S&P and the Dow both have outperformed, not outperformed, but they have generated positive returns over the whole life cycle. We've been through financial crisis, we've been through terrorist attacks, we've been through housing bubbles, dot-com bubbles, you name it, political turbulence. So those are going to be the more set it and forget it. And if you're going to be choosing your own stocks, I do have scanners. I'll put in the link of the video for you so you can go and see what kind of scanner fits your style. I have ones that are very high growth, safe high growth, where they have high margins, no debt. I have some that are a little bit more risky. They have a little bit more debt, but they are, using that to their advantage. Lower float stocks that could be a little bit more volatile. Stocks that you could invest in throughout the dips and feel confident holding because leadership is either strong or there has been past experience or not, past performance of the stock that has been consistent, things like that. So I'm going to go ahead and open Robinhood and show you how we can do this together. All right, so we should have Robinhood open and this is what it looks like. So we're going to go ahead and enter Robinhood, and as you can see, I have $55.88, and this is because I have a bank account connected now and I transferred $50 to test. And I also got to pick a free stock with Robinhood. If you want to pick a free stock, you can go ahead and use my link in this video. Or if you have a friend who also has Robinhood and you want to help them out rather than me, totally understand, have them send you their referral link and you can get a free stock, which means you get free money. You can then sell that stock and go buy yourself a Starbucks or continue to add that stock, whatever you want to do. I chose Disney as my free stock. I think it's at a good price. I could see myself buying Disney longer term, maybe throughout this daily challenge initiative, whatever. But this is what Robinhood looks like. Now, if you want to just buy the SPY or the Dow Jones Industrial Average because you don't want to think about it, you're not well versed in picking your own stocks, what you're going to do is hit the search bar at the top or hit the search button, and you can type in DIA and you can see Dow Jones Industrial Average there, or you can type in SPY and you have the S&P 500 ETF. We're just going to click into the S&P 500 ETF. This is what it looks like. Now, granted, you do not have $400 in your account. Maybe you have $2, maybe you have 50 cents. You can buy fractional shares. So what we're going to do, we're going to hit the buy button and we're going to come to this screen here. And at the top right, we can now see all these different options. We want to hit recurring investment. So now we can see every different frequency. We can invest every week, every 2 weeks, every month. So if you were going to invest every week, we're going to hit every week and continue. You're going to choose where the money is going to come from, and you could do buying power or straight from your checking account. I'm just going to have it come from the checking account. We're going to continue. How much do we want to spend every week? We want to do $2.50. $2.50 every week is going to go into the S&P 500 starting Monday, I believe. So let's submit. All right, so it's going to be $2.50 every week. It's going to come from my checking account and it's going to start December 5th. And so this is what the investment's going to look like. You'll invest $132.50 by December 5th, 2023, which is next year. Today is December 3rd, 2022. So, yeah, that's as easy as it gets for just straight up investing into those two stocks. Now, if you're like me and you're going to choose your own stocks, please do not choose the stocks I am choosing because number one, I have no idea what I'm doing. And number two, this is entertainment only. But if you're going to be choosing your own stocks, this is what that's going to look like. I'm just going to go ahead and edit this real quick because I just did that for an example. As you can see, that was really easy to do. I'm going to go back home. This is my home screen. I'm going to hit this little person icon and it has my information here. I don't know why it gave me that handle, but whatever. I'm going to hit transfer and then I'm going to hit schedule automatic deposits, set up automatic deposits. I'm going to do weekly. And I'm going to do not $5 a week, do $25 a week. And it's going to say every Monday, and will be available for trading. So starting next Monday, this is going to go into my account every week. However, we're starting this in January, but I'm just going to show you guys. There we go. So that's about as easy as it gets in terms of setting up the account, Robinhood. Again, my link is in the description if you do want to use my referral. I will get a stock, I think, so thank you in advance for doing that. Or I would say I would honestly reach out to a friend you might have and ask if they have Robinhood. I would say, you're closer to them than me, but I do appreciate it. So let's move on to the goal, the last part of the video. All right. So if we are going to be picking our own stocks, whether that's you're going to be using my screeners, or if you happen to also like the stock or industry that I'm swinging, this is kind of the criteria I'm looking for, and I'll generally be using. I can't talk. I will generally be using finviz.com to basically cull through this data. So we want to see strong sales, high gross margins, low debt, assets dwarfing liabilities, quick ratio of 0.7 plus or above, meaning they have enough cash on hand to cover any debts as needed if they were to go out of business tomorrow. Cash on hand, we like to see that. That means acquisitions, growing the company as needed. Earnings per share growth this year and next year. We want to see some insiders buying or selling. However, insiders will sell on occasion for tax purposes, so try and get comfortable differentiating those buys and sells. We want to have a strong C-suite, so we want to have a CEO who is strong, who has experience, who has led their type of company before. We want to see that company have great products or services. We want the float to be under 200 million, and that means the amount of shares available. So we want to see shares under 100 million only because that means the stock will be a little bit more liquid. And we want to see bullish technical setups. We also do want to be a little bit cognizant of the average volume. Again, average volume does not really bother me too much if it's too liquid or not enough liquid to get my money out, because I usually do buy for the move. So you'll see me buy and then we'll see the pattern continuing to go. Volume will pick up and that will then be our time to sell or buy more, etc., depending on what's going on in the stock. We want to avoid stocks that have no sales, low or negative gross margins. That is no. Lots of debt. Companies can have lots of debt and be really strong, but in this environment that we're in of rate hikes, debt is expensive, and if the company falters and they cannot make their normal average debt payments, that could really hinder them going forward. We want to see, So moving on. We do not want to see companies with more liabilities than assets. That is not good. Companies that have a quick ratio of 0.5 or less are too over leveraged and too risky. We do not want to see negative income, period. We want to see sales, be able to absorb that if necessary. We do not want to buy into speculative biotechs that are going through experiments to heal the world and end up failing. So we want to buy companies that have a track record. And we also do not want to buy companies that are mentioned on TV, on Wall Street bets or meme stocks, just because those moves have already happened. You can get hurt buying those and then having people sell on you. So we want to avoid that. And then my last slide here is our goal. My goal is for you to get comfortable putting your money into the stock market. I don't know what's going on there. So if you were to have another company manage your retirement or your investments, they're basically, oh, my head's in the way. Great. There we go. I'm a little cut off. That's okay. So, Yes, if you're to hire a company to do the same type of investment for you, they would aim to put your money in the S&P 500, giving you a broad exposure to a lot of companies and stocks. They will charge you a fee and it's kind of a hassle. But if you do this yourself, you will save money on that end, and literally you can just have your money go into the S&P 500 or the Dow Jones without even thinking about it. It's so easy, and you can make it as affordable as possible. We're using Robinhood as our brokerage, but there are tons of brokerages you can use. All of the ones I've listed, I do use actually, which is so funny. And at the end, I just want to empower you to take control of your finances and see that it's possible to grow your money confidently. So, with that, if you're starting out with this challenge at maybe 50 cents, a dollar, $2, and you're in the going SPY or DIA, great. That's amazing. I hope you outperform me. I hope you outperform the markets, like the general like hedge funds and institutions. It's possible. We've seen it before. So for this first year, good luck. I'm excited for this journey. Thank you guys for hanging out with me, and I'll see you in the next one. Bye.